right now with where it's all heading. Our very own Ashley Webster, along with Washington Crossing Advisors Portfolio Manager Caron. Good to see both you guys. I mean, you know, look, Ashley and I were just talking about this in the commercial break, Kevin. You seem to be in a situation right now where there's not a tremendous amount of fundamental, real growth going on in this economy, or frankly with earnings. I know a lot of companies are beating, but this is not because they're just raking in sales, but more that they're actually doing a lot of cost cutting. So my question to you is, why are we seeing upside in the Dow, not today excluded, given that things are just not looking so good in the world as a whole?
Well, there's three things. Number one, since the beginning of the year, I think the data has gotten a little bit better. We're still growing relatively slowly, just over 1% in the first half of the year, but that's better than where we were in the winter.
Gosh, you sound like Hillary Clinton.
Yeah, right?
1%, I'll take it.
No, please. Number two, but there has been some improvement. No, and it's also showing up in the earnings. So we were looking at $123 of S&P earnings. Now we're at $127. It's not going to light anything on fire, but the alternative would have been that the slowdown globally spread into a recession, which really hurt earnings this year. That's off the table. And the other thing that's off the table is, remember, the Fed was talking about 4 rate increases coming into the year. That's not going to happen. And you got really profitable companies and no place else in terms of a bond market to put cash. So, yeah, the equity market's got a bid.
You know, Ashley, we've talked about this for a while. I mean, you know, the Fed has had a big part in this run-up.
Huge. It's kind of, we live in a strange, altered world right now that's Fed-induced. I'd love to see it to get back to the free market. Just let the markets figure it out for themselves. In the meantime, we're the only game in town. There's a lot of money piling into the U.S. stock market, but where else are you going to get yield? It's very difficult right now. But Goldman Sachs put out an interesting note saying, get out of stocks for the next 3 months. They truly believe, as they put it, that it is fat and flat, that these prices are overinflated. And
but I mean, if the Fed's not going to move on interest rates, doesn't the party continue
but I think
or live
there are
another
concerns
day?
around the world. You've got a stimulus-led recovery in China. Where's that going? You've got the European Central Bank doing everything it can, including negative rates, as we're seeing elsewhere in the world, to try and get banks to get rid of their money and put it out to small business and loans and what have you. Hasn't really worked. I think we are compared to the rest of the world, we're fine. We're doing fine. But I think the earnings growth that we're seeing in these reports in this particular quarter, they're okay, but they're not great.
That negative rates thing, I think that's pretty interesting. And Kevin, as we look at a Fed that continues to grasp for tools that it frankly at this point just doesn't have to help stimulate this economy, could we find ourselves ever in a situation where the Fed's looking at negative rates?
I don't think so. They're reluctant to do that. And in fact, I'm thinking the opposite. I'm looking at what's going on in the economy, and I'm seeing the following things. If you look at core inflation over the last 6 months, you annualize it, you're at 2.5-ish%. So inflation should be fine if you're the Fed looking at that number.
Right.
If you're looking at what's called the output gap, how much slack in the economy, that's gone. So I'd be looking at raising rates. So there's a lot of things that argue for rate increases.
I'll believe it when I see it. Right?
Yeah, exactly.
All right, thanks so much, Ashley.